And welcome out to our show here, 9/27/2021. It is Monday morning, and we are live here on our YouTube channel. It's Tackle Trading's Halftime Report, daily show where we go through the markets one step at a time, top-down analysis style, breaking down the news, the charts, the information, anything that is moving financial markets. Give you guys some analysis here from the veteran coaches at Tackle Trading. And let's get right into the content, the show here today. Let's bring the coaches in one at a time. And by the way, as you're joining the channel, hashtag Team Tackle right in the chat like we talked about, but also give me one of those thumbs up and click subscribe, click the bell. Coach Matt, you first. How you doing today, sir?
I am doing fantastic. I'm excited to be here with everybody to break down the activity in the market today, and looking forward to talking about some sectors today.
I agree. You know, obviously that's something we do each and every Monday. We go through the sectors one at a time, giving people that bigger picture view, kind of setting them up for the week, having a conversation about what's going on in the under level of the market from the top all the way through. And there's some interesting moves going on in the sectors here today. Mark, how are you doing today, sir?
I mean, seriously, like sector analysis, top down style is always critical for top down analysts. It's a good day to talk sectors too. A lot of interesting action. Not doing peachy, listen. Lots of areas. Of the
come
market.
on, you want to? He's dancing over there.
Listen, I know. Listen, I've been touting reopening. I've been touting oil. It's all doing good. I want to brag, but I'll just say I'm doing peachy.
Doing peachy.
It's a mix. It is a mixed bag out there. So I do like the humble brag there.
So.
A mixed bag means the stuff that Mark's been focusing on is actually doing really well.
Yes.
Is that right? Yes. We've also got Coach Gino joining us today as well, and he's going to have another one of his Gino gems a little bit later in the show. Gino, how you doing today, sir?
Awesome, man. Had a good weekend, and I've got a great little Gino gem to show you at the end of the show. You don't want to miss this one. This one's good. It's good.
Yeah, I'm excited for it. I think you're going to be looking a little bit at the MMM moves in the option chain, giving people some good indicators on how to assess earnings volatility. We're coming up on earnings season. Makes a lot of sense. We'll do that.
I'm going to show them how to make life easy.
That's right. Make life easy. Let's get right down to the analysis, Matt. What's going on in these markets from a technical perspective? What do you see first?
Yeah, let's break down the market from a technical perspective just to kind of update kind of what happened on the overnight action as this market is fighting against a little bit of a short-term bearish retracement here. Step one in the bearish retracement goes like, and it really is about the type of resistance levels you come into. Step one is you wanted to reclaim that 4,400 zone. That occurred last Thursday. That also coupled with you taking back up above the 9 EMA, the 50 EMA there, the 50 SMA as well. You then reclaimed the trend line that was driving there as well. And what I said on Friday was it's not really about the continued price appreciation at this point. I think what you're really wanting to look at with the recent bout in volatility is a little bit of stabilization as it gets back above that 4,400 zone. And that's what you've been seeing over the course of the last 2 days. Yes, the doji fest in the market the last 2 days absolutely does not tell the story of what is transpiring in the market. I do believe the sector conversation does a better job at really detailing the story that's happening in the market. But overall, from a broad market perspective, you are looking at that candle hammered, that candle little bit of a spinner top doji type scenario. We'll see how it finishes at the end of the day. You see that right there as a little bit of slowing momentum against the backdrop of the previous 2 days, which had you reclaim all of what transpired the previous 3 trading sessions as you did violate support. And so what you really saw last week is a little bit of recovery, but I do think a couple important data points were reclaimed from a resistance perspective. Now they can act as support. That would be your moving averages 1 and then your horizontal 4,400 zone 2. Let's see the market. Let's see how the market performs over the next couple days. Maybe we get that high base scenario where we ultimately do see that breakout in that secondary pattern where you start to see this a little bit more bullish. I do think we're in that zone, but it's gotta work itself out a little bit more. There certainly is still and again, I think the phrase of today is going to be mixed bag. There certainly is a mixed bag in this marketplace right now. You have your winners and you have your losers, and you certainly have a little bit of rotation happening as well. Let's see how the entire marketplace handles that conversation as we get into a little bit more infrastructure conversations on the back half of this week. But for me, I'm seeing this as the current momentum is subsiding, but I'm seeing this, and again, perspective is important in these moments. I'm seeing this as, let's see if we can play defense above that 4,400 zone. Let's let these moving averages work themselves out. And so the ranking of tackle trading on the broad market right now is 30 in our newsletter. We maintain that ranking from last week because of the recovery analysis. Remember, the downgrade from from a week and a half ago did take into account the failure of support. And so you're looking at that as a recovery. We're right back up to where we were when we broke that support level. Let's now see how this market starts to perform from a defensive perspective. And if it can, I do believe the confidence levels of market participants, the more we stabilize above that 4,400 zone, I do believe the confidence of the market participants will start to increase as we stabilize at these higher levels. And again, higher relative to the last 3 days, not relative to anything else.
Mm-hmm. Mark, what about you? How are you seeing these markets and how are you approaching them?
Man, when I went to bed last night, futures were, as the kids like to say on message boards, futures ripping. Woke up at 5:30 this morning. I was like, futures aren't ripping. What's going on? And trying to break down. I was like, wow, there's a big difference in what's out and underperforming in the pre-market action. And those major indices are so weighted with tech, right? Like they make up such a huge, massive percentage. Apple, Amazon, all of those blue chip, beautiful darlings. Just such a big percentage of the whole index. Remember last year when they were calling it the S&P 5, right?
Mm-hmm.
And so, when they're having a bad day, it's going to weigh on the market. And can you break support levels and then just cause additional things if they continue to weigh? Sure, right? That would be my short-term concern. But, you got a battle going on right now. You got a battle. Is it a one-day battle? Does it stabilize and continue the nice intraday trend? That's what you're, looking at on the chart right now.
Well, and Mark, I know your time frame, and I know exactly when those banks open up. So Mark's looking at the futures market, the Japanese banks open, and we want to party during the Asian markets. We break out here. You see the breakout, nice price appreciation. But remember that overnight has 2 major bank opens in it. You first have the Japanese bank that opens up right about 8 p.m. Eastern Standard Time. But right there at about midnight your time there, Chucky, there's a big time bank out of Frankfurt, Germany called the ECB.
35-year-old Mark used to stay open for the European Open. The 50-year-old Mark, he's in bed.
I'm just saying that's that European Open right there. And so again, you have these time frames throughout the 24-hour period that will impact the intraday price. But from the Sunday Japanese Open to the New York Fed Open, right there Monday morning, I kind of feel the cash open Monday morning kind of is really the story that you really want to read. Mm-hmm. And so you got the Japanese Open here, the European Open here, and then you have the American Open here, right there, 6:30 in the morning, my time, 9:30 Eastern. You fired off. You fired off here in the morning. You fired off right at a known support level. Can we hold that support level is the question for me right now. And so you're looking at a little bit of a battle, a little bit of test right there at about that 44.30 level. If that is violated, you are looking at a 44.10 or a 4400 level from an intraday perspective. But again, coming back out to a little bit more of a time frame here, the level I'm looking at here that for the defensive nature of the market to really kind of form up is this old resistance level there, old support here. I'm looking at that 4,400 zone that coincides with my trend line as well. That's my line in the sand where I'm saying the market, you got to play defense above that level. If you play defense above that level, I think the stabilization argument will start to form. But again, we're only 2 days into this, right? Mm-hmm. It's okay to give it a little bit of time. But again, that 4,400 zone, I just think is very important to hold to maintain some degree of technical stability.
Yeah, especially even on the hourly chart. I mean, that's where a pivot point is. It obviously is clear support. People are going to be staring at it. If we can get stability above those levels intraday, Matt, and kind of rattle back and forth, I think that 44.80 on the top side is looking like a potential breakout location, maybe later in the week, or as we get some of that stability.
Yeah, and I'm looking at that 44.80. That kind of coincides with some moving average over here. I think we need some time at the top level. That's why I didn't really analyze it a lot. I do think we need some time at the top level because of the volatility that the overnight action did create. We don't exactly know where that breakout channel is yet, quite frankly.
Let it develop through the week, and then we can reassess. It makes sense. All right. What about the rest of the indexes here, Matt? Obviously, the story is in the sectors. I'm seeing the S&P 500, the balanced, it's got all that mixed bag analysis kind of built into it. The NASDAQ is down. The Russell is up. What are you seeing across the major indexes?
Well, in the Dow Jones, I mean, you're fighting up against two major zones that we certainly got to keep our eye on. That is right there around the 50-day moving average and 35,000. And so when you're looking at this from a technical zone perspective, you're simply looking at this level here between the 50-day moving average, if my mouse would click there, between the 50-day moving average and that significant whole number. We are a little bit range up here. You're a little bit range up here. So it wouldn't be too surprising to see some consolidation. We haven't really tested the 9 here. You're seeing a little bit of relative strength on the day in the Dow Jones. And when you're looking at the Dow Jones, obviously, you're talking about the cyclical area of the market. You're talking about your banks. You're talking about your healthcare companies, which is, again, there's mixed bags in those two sectors as well from an industrial perspective. And so you're obviously talking about industrial stocks. And so again, let's talk about the sectors, but you got to like the relative strength here today, but specifically that zone between the 50-day moving average and 35,000, especially with it being range up, would not be too surprising to see some consolidation here.
Yeah, it makes sense to me.
NASDAQ, very quickly, when you're looking at the NASDAQ, this is the one that has the concern in it from an index perspective today. You are finding that same degree of bearish retracement we talked about in the S&P. The difference is you actually violated support intraday, whereas you have not done that on the S&P. Let's see what this candle looks like on the overnight. But the NASDAQ, excuse me, the NASDAQ, you can't talk about the NASDAQ unless you talk about it from a sector perspective, because there's a battle happening between your economically sensitive technical stocks, such as your semiconductors, versus some of your big dog blue chips like Microsoft and, quite frankly, Apple. Which I'll get into that when we get into the sector.
When we get into sectors, because there is some pressure on some of those companies, or even some of those companies are in the news here today as well.
And then the little engine that never gets going, the Russell 2000, not only showing you how it's done, showing everybody how it's done here today, firing off. Obviously, the Russell 2000, very economically sensitive here, very dominated by a chock full of names that are economically sensitive, tied to the reopening play, and obviously doing really well here today. Can it ultimately break 2,300 and ultimately achieve that 2,350 zone? We're going to see, but you got to like the last 4 days in the Russell 2000. And honestly, quite frankly, and no joke here, outside of one violation of that 200-day moving average, you take that one candle out here and we're blasting against the all-time highs at this point. I think the theme outside that one, and the 1 day I'm looking at is the same 1 day here, the same 1 day here. You hold that, you got a different perspective. Again, you can't just discount 1 day. 1 day does matter. But again, you're looking at this as an overall bullish retracement. Didn't confirm, obviously got violated there, but you got to like the current momentum, and it does fit the current momentum here. You are going from 2150 versus 2100. Do you have a chance to break out? Perhaps. I'm gonna personally have this as range up as we're going into the breakout, but you do got to like this area of the market. There's no doubt about that coming into this week, and especially today with what we're seeing and specifically energy. Yeah, I do think you gotta be looking at the Russell 2000 as a little bit of a leader right now. Just gotcha. Again, I'm just talking relative strength here
to the other indexes. Yeah, makes sense. Makes sense. And it is. I mean, you look at those candles. I mean, it's firing back up off of that pivot point and did digest that 200. I want to talk big picture here for a second before we get into sectors, Matt. One thing that is going to be in the news throughout the week will be infrastructure talk on Capitol Hill. You know, the House Democrats are looking to be moving forward with a few different proposals. They want to pass $1 billion, traditional infrastructure bill, send it back to the Senate, or trillion, excuse me, a trillion extra.
Oh my gosh, he just had a Dr.
$1 billion.
That was a Dr. Evil moment.
Dude, get with the program. We talk trillions here.
$1 trillion. Yeah.
And he didn't go to 8 years of evil medical school to be called Mr.
No.
Called him Dr. Evil.
Dr. Evil. Anyway, no, the $1 trillion bill obviously is the one on traditional infrastructure. They are looking to pass that, send it back to the Senate. That should pass, but they're also looking to tie the $3.5 trillion, non-traditional infrastructure bill into some, budget reconciliation. I was reading this morning that they may have to do. Matt, is that a story that can build a theme here for the market? Number one, and what's your read on the situation?
It's a tough read, quite frankly, given the fact that number one, the $1 trillion. I mean, isn't that already baked into the market?
I think we all know.
Like we all know it's pat. Like nobody's even been discussing it from a market perspective, given the fact that it's already basically agreed to. Correct.
It would be really surprising if the $1 trillion bill doesn't pass this week. It's already passed the Senate. I mean,
now, so let me ask you a question, Tim. What are the Democrats going to do from a proposal perspective? Because if you can tell me what they're going to cut out of that 3.5 trillion, I'll update my probability on whether or not it gets passed.
We don't know yet because they won't give us detail. You got the hard left still wanting everything, right? And
they're not going to get it. Like that's not going to happen. There is going to have to be some cuts here. So for me, I ultimately do believe something does get done there. The Democrats do have the ability to pass something through budget reconciliation. But we have not seen the indications of the Democrats agreeing on a proposal from a united front perspective. And so it's very difficult to assess that from a market perspective, given the fact that we do not know what's going to be in the final bill. We do not yet know how that's going to be allocated over the next 10 years, because that's what this 3.5 trillion plan is. It's not a budget for this year. It's basically $350 billion over the next 10 years is what it is. And so basically it's think about it like this, guys. It's a scaled down version of the central bank's quantitative easing plan is what it is. Like, think about it. We're putting $350 billion from a non-traditional infrastructure plan. We're doing $120 billion in QE per month right now. And so, I know that the 3.5 trillion gets a lot of headlines because it has a trillion next to it. But what we are talking about from an economic perspective, what we're talking about from a market perspective is 350 billion in budget per year. Well, how much of that 350 billion per year gets passed? Where does it get allocated into? What industries is it attached to? These are all very significantly open questions. What advanced technology are they targeting from a research and development perspective? We don't know, right? And so until we can see exactly where the hard charging left is versus the Senator Mansions are, well, until we see what that final number is, it's just very difficult to assess from a market perspective. Now, to answer the question, can it become something where the market attaches a theme to it? Certainly, but I don't have confidence in that.
Yeah, it's not playing itself out that way right now. What about you, Mark? I mean, this is obviously, you're always thinking about from a game theory, theme perspective, what is driving the market. Do you think this one is going to go through this week? And what's your read on the situation?
I think it's a next week story. More than this week's story, just due to it's fascinating. I mean, if you want me to geek out for 45 minutes on what's going on in Washington right now,
please don't.
I'll try to give you the 45 seconds.
Stop loss on that. Yeah, thank you.
I'll try to give you the 45.
Fair stop out day.
Yeah.
McConnell and the Senate Democrats so there's three things going on right now: the $1 trillion bill, the $3.5 trillion bill, and the debt ceiling, raising the debt ceiling. So as Janet Yellen said a few weeks ago, the world doesn't end, right? You know, in her op-ed in the Washington Post. Republicans are not going to support the debt ceiling increase. They're going to give that to Democrats to tie to the $3.5 trillion bill, so that they have to use their budget reconciliation process with a $3.5 trillion bill. The $1 trillion bill, that's getting passed probably this week. As soon as Nancy Pelosi gets the votes in the House, that will get passed.
Looks like Thursday.
And he'll sign it. So that's a non-story this week. But how the Dems internally navigate on a ticking clock, because September 30th, fiscal year ends. Next year begins October 1st, and you need to raise the debt ceiling. Now, the United States of America has enough cash, according to the Bipartisan Budget Office, to pay its bills, and it will run out of money somewhere between October 15th and November 4th. So you got some time before things get in crisis mode. But in that time, and that's why it's a next week story or a week after, the Democrats will come to a resolution on how big the 3.5 trillion is. They'll tie the debt ceiling to that, and then it will get passed. That's how I see it playing out. But it's a couple week process, and there will be dramatic headlines along the way. And you just don't know how big the package is going to be that they sign it to.
So there's still too many unknowns to really tie it to any specific catalyst.
There's one hypothetical unknown that is always known. The debt ceiling will be increased.
It will be increased.
Yeah.
It's just
and they can play their political games all week long. That's fine. They can paint whatever story they want to paint all week long. That's fine. This is a political story at this point. It's a more market story next week. And I do agree with Mark on that, because when you're looking at the debt ceiling, guys, it happens every time. Like, we've been doing this song and dance since 1960, guys.
No.
And every year, outside of 3 years, we raise the debt ceiling, and most years we raise it twice. This is a non-political issue. It's
and
for
most
headlines.
of the time it's done on a bipartisan basis. It won't happen that way this time, but the Democrats in control of both chambers have the power to
even
do it.
in Trump's years, it was a bipartisan process.
But so there's going to be some extra. You're going to see a lot of headlines. There's going to be some dramatics, but it is a next week, week after story.
Yeah.
Gotcha. Appreciate both your input on that. Another one of the things from a theme perspective, Mark, that we were talking a lot about last Monday was this Evergrande situation in China. It was one of the big bricks in a wall of worry. We covered that through the week. The PBOC even injected more money into their market over the weekend and Monday morning. What is your read on that one? Has that dissipated in your opinion? Do you still see some risk there? What's your read on it?
Oh my gosh, you're giving me 45-minute questions to answer in 30 seconds. Evergrande is still looking shaky, but the Chinese, according to the Wall Street Journal, have a plan. The Chinese government have a plan to come in and take over to make sure that there is not systematic risk from Evergrande. That, in conjunction with the liquidity China's throwing in the market, China's on top of it. They're not going to let that escalate. Now, there are worries that there are bigger problems in the Chinese property market. But while you might see problems on Evergrande, it looks like there is a plan in place that even if Evergrande defaults, that the Chinese government comes in to take liquidity into the market and to take over the Evergrande situation, state-controlled nationalization of it. So
chart's sitting all the way on the bottom there, that weekly chart there, Matt. What are you seeing in the chart, if anything?
I mean, if this was an American company where I had confidence in the regulatory measures and what they're doing from an economic perspective, I'd say it's in a viable situation. This is what value hunters do. They combine fundamentals and technicals. Technicals are there, fundamentals you're not.
Yeah, that's right. That's kind of exactly right. The fundamentals are still very much gray area for me.
Well, and I mean, you couple the Chinese story because they keep telling us they want to go more and more conservative, correct? And they even said that from an electricity perspective today, discounting some of that, and that's a little bit of the concern with Tesla and Apple with what China said with the max electrical.
Green.
Right. Okay.
Seriously.
But on the other side of the coin, they're saying, let's just go ahead and bail out and inject liquidity. So again, mixed messages, mixed bag. Again, when you're looking at value hunting, you're going to want to look at it from a technical perspective and saying, okay, do we like this from a value perspective historically? I don't think it takes a rocket scientist to look at this chart and say, yes, every time this chart gets into 38, 37, it gets gobbled up, gobble, outside of one time. outside of one condition, and that one condition was historically something that absolutely nobody in our universe could have predicted, and that was the pandemic and the pandemic response and the pandemic market response. And even then, it spent 2 weeks underneath that zone before we saw the price appreciation again. So yeah, technically you're there, but fundamentally, are you there? If I'm analyzing a company like, say, Verizon, let's take Verizon for example, and I'm looking at Verizon in the same condition, right? I'm looking at Verizon, I'm saying, yeah, I like the zone historically, technically, and outside of one condition, and only one condition in the last 2.5 years, have you violated that zone. And in that condition, all you did was spend 2 weeks under that condition. You're seeing the same technical story here, right? You're seeing the exact same thing. But the difference is on Verizon versus on, say, an index like China here. On Verizon, I can just say, well, let me come to Verizon and let me compare some very simple metrics to help me understand valuation. Well, one of the metrics that Coach Greg taught all of tackle trading last Thursday in the halftime report was this: a simple understanding of PE ratio. And the PE ratio tells me, basically, it answers a question of, am I receiving fair market value? And what Warren Buffett said, as taught to him through Benjamin Graham, said anything around a 20 is a fairly decent value. Now, you're going to want to compare it against the industry. You're going to want to compare it against like companies to truly have an understanding of value. But in anybody's metric, I'm willing to bet they would consider an 11 P ratio against a forward P ratio of 10 with the price to book at 3. I think they would consider that fair market value. Mark, you're a Buffett disciple. You're a value hunter. Would you consider that fair market value?
Anyone that bought Verizon based on that, I would say I can't criticize that one bit. Sounds very reasonable.
So technically, I'm looking at it. I'm looking at this from a technical perspective, and I'm saying, yeah, I like the zone here, right? I like the zone here. Feels like I got cheap risk. Verizon pays us a dividend. We can write some covered calls against it to offset some of the risk. Feels like a pretty decent opportunity. I can come to AT&T. And I can say the same type of concept. You know what? I kind of like that zone, right? And historically, when you look at a company like AT&T and we go back out in time, and I mean time, AT&T has been proven over time to be a wonderful buy at the lows. Okay, like in a world where you just love to disagree, can we all agree on one thing? Buying a company like AT&T at the lows over the course of the last 45 years since they broke up AT&T has been a good decision?
It's been a winning strategy. Yep.
Okay. So AT&T's at the low. It has 45 years of history here. It pays a decent dividend. It's not the company of my choice. I would rather have Verizon. But I certainly understand the dividend argument, the cash flow argument, the value side of it at the lows. I can then come very similar to what we do with Verizon, and I know this question was not meant.
I love this though.
Answer, but I am getting to my point here. So just stay with me very quickly. So I can come to AT&T and I can say, well, yeah, let me look at some metrics here. Well, I like the price to book. I'm going to have to look into why they don't have a PE ratio. That's going to give me a little bit of concern. Now, I'm already concerned about AT&T in general, but you get my point. I can come and I can do my research and I can do it against comparable. And I might look at AT&T and I might look at Verizon and say, you know what? I side with Verizon over AT&T, but it's based on metrics, right? And then I come to FXI. And I look at FXI and I'm saying, what's my concern? My concern is I don't know what China's going to do. I don't know where their lines in the sand are. I don't even know what they're trying to accomplish. Even on a day where they're injecting liquidity, they're also saying in the same light, we want to go more conservative. Every time they put out a regulation to go more conservative with their regulatory behavior, they come back in the other light and say, no, we kid. Once the risk does show its ugly little face. We're going to inject liquidity the same way every other bank and every other government around the world injects liquidity. It gives me a little bit of concern fundamentally, because the evaluation isn't fundamental from a PE ratio when I'm looking at Baidu, or when I'm looking at the VIPs, or when we're looking at Tencent, or when we're looking at any of those companies that come out of China. The concern itself is China. And so for me, it doesn't meet the standard for me that we have confidence fundamentally. Now, would I blame anybody for seeing this cheap risk technically? No, as long as that stop loss is utilized in a cheap risk environment. And so fundamentally, if you have conviction at 37, 38, you're going to have conviction at 35. You're going to have conviction at 33. You're going to basically write covered calls. You're going to dollar cost average, but your conviction fundamentally doesn't cease to exist on AT&T or Verizon simply because short-term support gets violated. Mm-hmm. But on FXI, if you're just looking at this as a technical value, well, then that technical value is now violated if support is violated, which means your stop loss has to be in there. And so if you are going to take the risk to holding China at the lows, it's got to be treated from a technical perspective solely. And that's the point I wanted to make.
I appreciate that, by the way. And looking at AT&T and Verizon, those metrics, we can have a little bit more faith and trust in what we're seeing there. So that makes sense as well. And if you're going to approach FXI, technical conditions are there. And it is at support, like you've just pointed out many times, so we are sitting at support. All right, let's move on, though. I do want to get into sectors next here, Matt. Yep. We do this each and every Monday. What is your read when we're talking about growth, cyclical, and the defensive sectors here this week?
Well, let's take a look at the sectors. And again, for those of you Team Tackle, you guys know how we kind of categorize all the different sectors out there. We have your aggressive sectors, communications, discretionary, and technology. You have your defensive sectors, and your defensive sectors will be utilities, real estate, consumer staples, and healthcare. And then you have your economically sensitive cyclical areas of the market, and that would be your energy plays, your financial plays, your industrials, and your basic materials. Now, whenever in the Tackle Trading newsletter each and every week, ladies and gentlemen, we rank these sectors. We rank the S&P, we rank the sectors, we rank the commodities, and we rank them from a scoreboard perspective. And so when you're looking at the scoreboard basically will tell you where our final rankings are and if they got upgraded or downgraded. And so we always base the rankings on where we have the S&P at 30. Now, as you can see, a 30 ranking is a slightly bullish ranking. Now, for Tackle Trading and for people that are advanced traders, what a slightly bullish 30 ranking tells me is it tells me personally where I need my delta weighting portfolio to be. What it tells most people is that we are slightly bullish in the marketplace right there at that positive 30 area. Now, as you can see, most of the upgrades that happened over the weekend, you saw a few of the more economically sensitive areas of the market, finance, energy, industrials, a little bit of upgrades, healthcare, staples, real estate, a little bit of a downgrade. These, your aggressive areas of the market, comms, technology, and discretionary, a little bit more stabilization. Communications, obviously, with the short-term pain that Facebook has been going through a little bit, we'll break that down. Sees a little bit of downgrade. Technology, discretionary, just a little bit of a stabilization from a ranking perspective. So now let's take a look at these one by one from a technical perspective. Now, regarding technology, once again, when we're looking at technology, the downgrade from last week was within this violation of support here. Once again, as I talked about earlier this week, as you got back above the 50 and the 200, the 50 and the 9 got back above 155. I think you got to respect that from a rankings perspective. Technically, you're fighting a battle here, though. Technically, you're fighting a battle on the short-term downward momentum with a little bit of a bearish retracement on the backdrops of that weekly channel that's been very, very, very strong. I do think technology is going to need a little bit of time to battle that out, especially when you look at what's happening in the blue chip area of technology versus what's happening in some of those economically sensitive semiconductor areas. When you're looking at Apple, for example, number one company in the market, what are we looking at technically? You're looking at a short-term bearish downtrend with the bearish retracement that did confirm here today. Now, obviously, you're seeing a little intraday price action come back up here on Apple. If Apple can get back up above 147.5, reclaim 148, right where the 50-day moving average is, I think the confidence in this sector is going to come back with some degree of force, especially when you're looking at Microsoft. Microsoft not going through the same short-term pain, but kind of stuck in mud here from a technical perspective when you're looking at a tight range against 305. That rising 50-day moving average, you see the battle kind of playing out there. No consistency in that. But then you look at SMH, a major component of the technology space, gap down with absolutely everything last week. But you got to love this position where it's in overall relative to what's happening in technology, relative to what's happening in the broader market, NASDAQ and S&P. Held up against the 50, broke back up above the 20 and the 9. Obviously showing a little bit of pain here early today with everything else in tech, but we got a green candle and we're starting to march up a little bit from a short-term perspective. Look at the firing off coming into the cash open, obviously fighting against some resistance right there at 272. Look at 270 come in here. Multiple times throughout today, it had a chance to violate 270, did not. I like that from an intraday perspective. Let's see if we can ultimately break out here. But when you're looking at those semiconductors, I do think you got some interesting bottom up type analysis happening as well. I kind of like Micron here. Coach Mark, this was one of your darlings for years and years and years and years. Here's old Micron battling against that 50, breaking out of that 75 handle as well. This looks like an alligator situation where we're going to drive into that 200-day moving average at 80, kind of like Micron from a short-term perspective. Intel, the big blue hypothetically in the semiconductor space, just a little IBM joke there. Big blue showing a little bit of short-term reversal characteristics here. Look at the left shoulder at 52. Look at the head at 51.5. Look at the right shoulder at 52.5 as well, showing a little bit of stabilization. And then you obviously got the top of the semiconductor space with your Texas Instruments, fighting against a $200 breakout. That looks tradable above 200. And then obviously your big dog out there at the top of the market would be NVIDIA. Very similar to the Microsoft discussion. Had that 230 breakout chance, didn't. Now fighting against the 50-day moving average. You see the mixed bag that we're looking at. For every Texas Instruments or perhaps a Micron, in technology, you're dealing with a little bit of bearishness in Apple and a little bit of mixed bag analysis in Microsoft and NVIDIA. So I think we need to see a little bit of clarity in some of these volatile conditions before the sector itself really solidifies itself after recent bouts in volatility. Moving on to communications. Communications was the only sector in the aggressive areas of the market that did get a downgrade. And the downgrade was very simply, unlike technology that actually did recover its 50-day moving average, and unlike discretionary XLY that you gotta like the current momentum behind, here's communications just stuck in mud after that gap down, which basically everything in the market gapped down, didn't reclaim the 9 EMA, didn't reclaim the 50 EMA, the 50 SMA. And a lot of that is on the backs of some really mixed analysis in Facebook showing recent bouts in volatility. Google trying its best Google impersonation, holding that 50. Let's see some clarity coming out of Google, though, especially when you're looking at some of these other areas in communications. Take a look at the gamers. The gamers have just been nasty and nasty and nasty and nasty some more as they're tied to a lot of what's happening in China. but they're also coming into some very significant low prices. You look at Activision between 75 and 70, a lot of support here on Activision between 70 and 75. Can that stabilize at the lows is an open question. And while that fights up and answers that open question on companies like Activision and EA and Take-Two Entertainment, you're going to have open questions on Facebook. Can Facebook hold 340? Because right now this looks like a 340 support bounce coming into a bearish retracement. We haven't had bear stop out day in Facebook yet. Can this sector, which this sector is really held to the top by Google and Facebook, can this sector get going if Facebook doesn't have bear stop out day where the bearish retracement gets blasted? I have my doubts on that. I think those open questions. One, Facebook. Can it hold 340 and can it get past this bearish retracement that is forming in the short term? That's one question that needs to be answered before I feel confidence comes back in communications. The second one is in the gamer space. What is Activision? Not what, but can Activision start to show a little bit of value love around that $70 to $75 mark? It does have historical importance between 70 and 75. You see the 200-day moving average right there at around 70. Historically, you got a lot of action between 70 and 75. So again, I just got to see those questions. Once again, the recent volatility in Facebook and some of these big time gamers like Activision, we got to see a little bit of volatility shifts, a little bit of slowing momentum, and a little bit of reversal characteristics. Short term against Facebook, a little bit longer term against Activision. But again, until those questions are answered, I'm going to have a little concern here in the communication space. And while that is answered, I gave Verizon and AT&T, I gave them as examples for a reason. Mm-hmm. We're setting at the lows in those. And while a lot of this volatility subsides in comms, I kind of like Verizon around that 54 from a longer term perspective. Again, it's a company that does have proper value. It's a company that historically has been gobbled up at the lows. But again, you only do that because you don't care if it gets beat back down a little bit. You write cover calls, you capture a dividend, that type of analysis. Those are when we're looking at the aggressive sectors. And last but certainly not least is discretionary. And this is the sector that has an opportunity this week to break out and technically do something fairly decent. And we've been talking about this sector for the last 2 to 3 weeks. And even in the gap down, we didn't even downgrade this in the gap down. Love the ability for this to get back up into the highs. It did. It reclaimed every moving average, has some of the best momentum behind it over the last 4 trading days in any sector. And you couple that and you are breaking out here today in the discretionary. I do think going from 177.5 to 185 on a breakout. Yeah, I do think you're a little bit overextended in the short term technically, but a little bit longer when you're looking at when you're looking at RSI. We're just right there above 50 here, nowhere near that 70 handle. That breakout could be legitimate. Again, little overextended in the short term, but RSI still confirming in the longer term. Let's see how that handles that 185 breakout. And as that sector does handle the 185 breakout, let's take a quick peek at why that sector is breaking out. Tesla here, we talked about it last week. It was on one of our reports last week. It was on the report here again this week. Simple fact is Tesla has not been a great breakout in recent history, but that analysis changed. And as that analysis changes, we traders have to adjust with it. When you're looking at this breakout now, you're looking at the breakout not against a short-term breakout, but you're looking at it against an intermediate and short-term breakout. Tesla no sell day on Friday, continuation all the way into 800. We talked about 800 being the first target, kind of that line in the sand that Tesla has to reclaim following that breakout, for this truly to be a legitimate breakout where we like, no, it's not just a base hit. It's a base hit at this point. For it to be that double, triple bagger, for it to be that proverbial home run, we got to break out of $800. And if you do break out of $800 on Tesla, there's not a lot until you start getting into the chop historically between 870 and 900. There's a lot of clear air there, including these wickety wick nonsense. All right, lines up right in that 870, 875 to 900 level. Looking at this at 800, like the momentum, but again, this market does not have a theme right now, and there is a mixed bag. But Tesla over the last 2 days following a very successful launch, and when they came back down, what was that, 4 days? 4 days they spent in space. Well, they might spend a little bit more time in space from a price action perspective as well. Yeah, I did that one on the fly tackle.
I like
Give
it.
me a thumbs up for that one. Okay, but it's got to get above 800 first, Tesla. Let's go, Elon. Let's go. Don't send any tweets. That's not what I'm asking for. I'm just saying, let's go to Mars, brother. But when you're looking at some outside this space, though, you got Home Depot, wickety wick above 340. But again, you got to like the position. Lows, once again, very similar to Home Depot. Most of Tackle does prefer Home Depot over Lowe's, but they're going to trade in line with one another. Couple things, though. McDonald's. You got to like what's happening at McDonald's over the course of the last week or so. And from a multiple time frame perspective, when you're looking at this, and again, we're not talking an aggressive company here. This is McDonald's, right? We like to buy $1, not Happy Meals. What is that? $9 at this point, a Happy Meal?
They're not a buck.
I haven't bought a Happy Meal in a while. So my daughter's 12. The last time I bought a Happy Meal was, oh man, she thought she was 35 when she was 3. But we can talk about that later. When you're looking at McDonald's, you got to like this from a multiple time frame perspective. Again, this is kind of adding to that discretionary potential because you're looking at this a breakout on the weekly. You got to like the momentum building into that. Certainly a little overextended at this point short term, but McDonald's is more of a position and an investor analysis. So you got to like that from a multiple time frame perspective. And then when you look at another stock in the discretionary in the discretionary space, Ford Motor Company, and Coach Greg, he loves Ford so much, so much. He talks about Ford as his favorite investment vehicle, by the way. He's dying over there right now. He was dying when he had to talk about it, but it was that good. It was that good. Here's Coach Greg. He can't stand the vehicles, but he's like, yeah, but I like money. Ford blowing up here out of that short-term reversal. Look at the reclaiming of the 50-day moving average. Good momentum over the last 4 days. So where's the cold water here in discretionary? Why the concern? Why not just, hey, let's go open up those risk graphs and let's roll with it? Well, we haven't talked about Amazon. Can you do anything?
Yeah.
Anything. One thing, anything.
Break out.
I'm waiting.
Come on, do something.
This is a big time player in this space. It's hard for people like Gino, myself, you, Tackle. It's hard for us more conservative traders to get that aggressive in a sector when it doesn't have the support of the biggest component of the sector. And that is Amazon. And I'm not saying anything negative to Amazon. It is stuck in the middle of a wide range neutrality. And that's why I say, do something, right? If you go down, maybe we can short you, but do something, because not even cash flow traders love Amazon. Mark, do cash flow traders love Amazon?
Hate cash flowing on Amazon because I'm limited to bull puts and I'm limited in my strategies and
you're limited to liquidity concerns on their bid-ask spreads and all of that jazz.
So even as a cash flow trader with Amazon, when I want to get involved is buy a few shares here and there.
The cash flow trader in you says, Amazon, please split. Just please split.
I've been waiting for that for years.
Just please. So Amazon, and again, I don't bring it from a concern perspective. I bring it from this is one of the reasons why at Tackle we have a 35 ranking on this sector, despite the fact that we really like it, because it doesn't necessarily have the biggest support out of this space, and that is Amazon. And then when you look at one of the major components from a retail perspective, you're talking Nike. And Nike got absolutely blasted on its recent earnings. Now, I will tell you, I think the blast was a little bit overdone on the earnings performance, and I do think you got to like the combination of what is happening right here at that 200-day moving average, right there at about 146, given the fact that ding, 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 just so hypothetically coincides with the 200-day moving average as well. I think you got to like that as the ability to find support. But as we talked about last week in the webinar I did on Monday, support's not support until confirmed by the marketplace. It's not what you think it should be, right? What you think it should be is called the catalyst. You like the zone. You like the zone because of the historical relevancy of that zone. But it's only support in the current if the traders use it as support. That has yet to occur on Nike. So you got to like the zone. Can it help the sector? Certainly, if that zone holds. But again, right now, one of the concerns in the space would be Nike, and let's see how it does perform at that level. Now, when you're talking about the cyclical areas of the market, let's look at the financial area of the market first and foremost, XLF. Finance, you got to like the short-term momentum behind finance. We upgraded finance at Tackle Trading over the weekend. It does have a current 30 handle on it, representing a slightly bullish ranking in the world of finance. The reasons, very simple. Why finance and not some of the other sectors? Because it broke up above the previous pivot. It broke up above the 50-day moving average, the 90 EMA, the 20 SMA, and the Fed told us to like finance.
They sure did.
Right?
Yeah, absolutely.
I mean, that's why. Okay, so that's why the upgrade. Now let's talk about the current analysis, because I think the current analysis is really important. Right now, I do believe you're looking at a slightly overextended situation from a technical perspective. And the simple reality is you're going to fight against a very important resistance level right there at 39. And so we certainly could see a scenario this week, and I think this scenario would be very, very healthy for the market, where we see some degree of flag, some degree of high base scenario, where we get, you know what, Tim? We're bringing the Epic pen.
Oh, boy.
Dude, everybody loves the pen.
We're bringing the Epic pen. What are we doing here? What are we doing, Gino? We got to bring the pen, right? Okay, where we'd see, we got to bring the pen if it draws the right color.
Pictionary.
That's what we got to do. There we go. Okay, what I'm talking about is when you see this type of overextended, what you want to see, guys, is not this number. And the reason is very, very, very simple. It leaves you behind. It's like you were late to the train and you're yelling at the train as it's going 45 miles an hour. You're saying, wait, I want to get on. No, it left you. It blew past all your technical parameters. And so what you want to see is you want to see some degree of stabilization at the top end of the chart, where you basically see it as now a high base, and it resets those technical parameters. Or two, you want to see this come down to 38 and form some degree of flag-based pattern in the short term, giving you a really good higher level of support, where it could be absolutely front-loaded as you get into this resistance breakout at 39. Either one of those two scenarios, a little fade action this week or a consolidation this week, would not be bad at all. It would be beautiful recovery analysis, in my opinion, while you simultaneously start to develop that next directional opportunity. And when I'm looking at this, I'm really looking at your stocks like JP Morgan, right? You're a little bit overextended. You're 5 bars, momentum. And you certainly could momentum trade this, but wouldn't you like it from a directional perspective is if we see that 167.5, what's the high of today? The high of today on JP Morgan is literally 167.40. It coincides with the high of last, what was that? June?
Late May.
Late May, early June. So wouldn't you like this a little bit more? Is if instead of it ran 150 to 170 on the breakout, it consolidated, let that 9 EMA caught up to it. It gave us a little bit of beautiful technical patterns where you see that lower level, where you see that higher level of support. You can say the same thing on Morgan Stanley. I like the potential for Morgan Stanley to break out. I like the potential for Morgan Stanley to break out more than JP Morgan. It is absolutely in a tradable situation. But if that tradable situation does not pan out this week and we instead get a high base, I'd like that more. Absolutely. And so you are seeing that a little bit when you're looking at the financial sector. But why the 30 and not something more aggressive? Because again, the mixed bag to a certain extent. When you're looking at, for every Morgan Stanley and JP Morgan that looks really, really, really good, you have an equally difficult environment with a PayPal or with a Visa, where it's showing a little bit of, increasing volatility, mixed bag, reversal. You tell me. It looks very volatile. When you're looking at BlackRock, a major component, looks like it's forming a bearish retracement. So from a sector perspective, we probably need to see a little bit of time here, but I do like the current momentum of the sector and thus the slight upgrade there. Industrial, let's do industrial very quickly here because you are looking at a bearish retracement. The industrial sector got upgraded last week, but again, not all upgrades are alike, guys. When you're looking at an upgrade in finance from 40 to 30, you're looking at us going from neutrality to bullish, into some degree of bullish condition. Here in industrial, we went from slightly leaning left of 50 to slightly leaning right of 50. We're still neutrality here, but we like to reflect the current momentum. And you did reclaim the 9 EMA. You do have current momentum against you, but you are far, 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 far from out of the risk environment here in the industrial space. And we're talking about a space that is going to have the political eyes on it this week. And guys, I don't know about you, but when the political eyes are on an industry, when the political eyes are on a sector, when the political eyes are on anything, I don't want to touch that. It just kind of let it work itself out to a certain extent. And so to me, this is still kind of a stay away until we start to see the combination of the political headwinds dissipating and a little bit of these technical volatile situations dissipating as well.
Love the analysis, Matt, breaking those down one at a time. And obviously with that political backdrop over the next week or two, as we're still waiting for the details there, EXLI just may be a stay away for a few days there.
When you're looking at XLB materials, negative 45 here, once again, very similar to industrial mixed bag. And the mixed bag is very, very simple here. I can do this one very quickly. For every Lynn Holdings that you have that might recover, you have a Sherwin-Williams that has not and is failing at support right now. That's what you're having. In the material space right now, you don't even have your mining stocks lining up. For every FCX that is firing off here today, you have a Newmont Mining that is doing absolutely nothing. For every Lynn, you have a Sherwin-Williams. This is a very difficult area of the market right now. It's tied to many, many different degrees of analysis. For new traders, for veteran traders, I mean, for veteran traders, I think lockdown mode, right? And I think we all know what lockdown mode means. What does lockdown mode mean?
Lock down those risk graphs.
Lock down the risk graphs, right? Lock down the risk graphs. So I still think we're in lockdown mode in those gold mining stocks. I still love the opportunity that these represent longer term. Feel they have proper value. You can write covered calls against them. You got to collect a nice little dividend, but I do think they're in a moment where they have volatility right now, and that volatility does represent uncertainty. And so this is just a very difficult space for the market right now until we see some degree of clarity coming out of the chemical spaces and some degree of clarity coming out of the metal mining spaces. I think this is a lockdown, stay away to a certain extent. Those things can change. They can change fairly quickly as well. But right now, I think we need some clarity in the basic material space. And then when you take a look at energy kind of bearing the lead a little bit. But again, I'm a systematic type dude. I'm a top-down type guy, and I'm going to go through my process. When you're looking at energy, positive 30, got a nice little 10-point upgrade at Tackle Trading this past week. We love the breakout here. We were all over this breakout all last week, all the week before. I mean, we've been all over this for a month and a half. We've been ready. We're ripe. It's about time is all I want to say on energy, but you got to love the breakout here. A lot of this is tied to what's happening in the oil market. We've talked a lot about that 75 battle. Look at us battling at that 75 handle right now. Energy relatively, though, crude's up 1.82% here today. Energy's up a whopping 3.5% here today. That catch up is absolutely real. And not only did it blast out of 50 on on Thursday, continuation on Friday, gap and run above target 152 today. You got to like this. You got to like the energy chances of getting into that 55 handle. And I don't think anybody would cry in their spilled milk if they got a 55 handle on the energy space. And it looks like it wants us. So let's see how it navigates the next few days. But I do think you got to like energy coming into this week. A little bit of range up with that gap on that gap. So you might be chasing a little bit. If you look at some of those components in energy, like the Exxon Mobils of the world, very quickly, like the Exxon Mobils firing off, kissing against 60, right? When you're looking at Chevron, same type of thing, firing off, kissing against resistance. But Schlumberger, that one made the report on over the weekend. Nice little confirmation, continuation above the high of today here on Schlumberger. If you don't like Schlumberger, Williams, WMB here. Same type of analysis, bullish retracement confirmed, looking at that nice little breakout, continuation above the high of today on Williams. When you're looking at Devon here, mentioned, I believe, in the reports, but also brought on last Thursday in the halftime report, Devon breaking and running very aggressively. So if you haven't been participating, we got range up at this point. Simple. Traders have timing, guys. It is. Maybe it's time to wait for the next technical setup, but I think for the cash flow traders, they're building confidence right now. Directional traders, they have confidence right now. It's just a matter of now waiting for technical conditions and trading. But you see a trade, you pull the trade in energy.
Absolutely.
Yes.
And it's moving up towards some of our top rated sectors. It's only right behind technology, I believe, just a little bit. And it might get that upgrade here by the end of the week.
Well, yeah.
Upgraded last week and
Well, yes, you got to like this. And again, when you're seeing sometimes when you're looking at the newsletter, you'll see this convergent around 30 or 35 or 20, but you got to look at this from a story to a certain extent. A story told over time of downgrades, a story told over time of upgrades. And that's when you start to see themes develop. And therefore about, 3 months, I mean, it was healthcare. Well, for the last month and a half, that's been downgraded as trends changed, as momentum changed, as multiple timeframes changed. And so, you're looking at, say, for example, energy and finance right there at the 30 level versus real estate right there at the 35 handle. Well, I don't want to say zero confidence because you do have Simon Property Group doing really well in that space. But for an example, as a trader, I like the current momentum of energy far more than the lack of momentum in the real estate space, for example. When you're looking at those defensive areas of the marketplace, again, you're talking healthcare. Healthcare is just, once again, word of the day, mixed bag, guys, but that's the simple reality. But now the bears are starting to take control a little bit. And it's really on the backs of your drug manufacturers showing weakness in Eli Lilly, Johnson & Johnson showing additional weakness as it battles up against a 200-day moving average. So you're seeing some weakness in your drug manufacturers. When you're looking at Danaher, and Thermo Fisher, two stocks that have been leaders in this space from a technical and a performance perspective. I think everybody and their dog can now see the reversal analysis at this point play out in Danaher. When you're looking at Thermo Fisher, TMO, again, a leader in this space, but isn't this a day where you get a little concerned with the trend? And don't get me wrong, I know the trend hasn't been violated. The pattern is a bullish retracement, but don't you have to be slightly concerned when you couple Danaher and Thermo Fisher's volatility on a day where these stocks have been fairly decent for the last 6 months? I think that could be telling. That could be telling. It's like you're playing a poker hand and somebody just gave you a tell. It's not a 100%. You're still reading the tea leaves to a certain extent, but volatility shifts are a tell to me. And so this is a little bit concerning for the current strength in TMO and the current strength in Danaher. And where could that go? Obviously, we're seeing weakness in the drug manufacturers. One area from the bull opportunity to keep an eye on, though, and Coach Frank talks about these a lot regarding healthcare. And this is one of those scenarios where let's hang our hats somewhere in the healthcare space. Well, let's take a look at those healthcare plans to a certain extent. CVS here showing a little bit of consistency on that 50-day moving average, firing off here a little bit. But the one that really kind of captures all of our attention here is Ant-Man coming off that 200 bounce. Good confirmation candle. Looks like it wants to drive into 400 as we discussed last week. So healthcare, not really a mixed bag. It looks like money's flowing out of it to a certain extent. But where could there be some opportunity? Perhaps as we see volatility in the drug manufacturers, as we see volatility in the biotech space, maybe Ant-Man, CVS can show a little bit of stability. I like Ant-Man's ability to get to 400, but outside of that, man, for every Ant-Man I can pull, I can give you about 7 Abbott Labs
yeah.
in this space. And so mixed bag is not the word for the healthcare space. Bears do look like they have some degree of short-term control. But again, healthcare plans kind of beat to their own drum. Ant-Man, CVS look a little bit spicy. Staples got a 45 handle for a reason. Nothing really to kind of look at. If you want to look at a couple stocks in this space, look at Walmart. A bunch of nothingness. When you look at Coca-Cola, a bunch of nothingness. When you look at Target, a bunch of concern. And so you're looking at Staples right now, got a downgrade at Tackle Trading right there at the 45 handle. And again, with Walmart battling and Coca-Cola battling 200-day moving average, yeah, let's let those battles play out. Target doesn't look like it wants to play. That looks like a short-term bearish downtrend, bearish confirmation downtrend at this point. And everything we liked about Target's ability to break back up above 248 just got blasted here today on a failure of support. Got to update and downgrade here. Target looks like a sell. The sector looks like a sell until Walmart, Coca-Cola, and quite frankly, until Target wants to do something a little bit different. Real estate got a little bit of a healthy downgrade for us. That was more to catch up to the current momentum of the rest of the market. Again, had its chance to hold, fell. Had its chance to hold, fell. Now you're up. Now you're looking to downgrade. Real estate got downgraded. The only thing that looked what degree of decent out there in the real estate space right now is Simon Property Group. But like Coach Mark will tell you, not all REITs are created equal. Simon Property tied to that reopening play a ton with a bunch of retail properties. And so obviously that's going to beat to its own drum here. I like the ability for Simon Property here to break out. Let's see if it can get that job done. And then the last space, and I went a little long-winded, but I had a lot to talk about today in the sectors. Is utilities, and utilities is your prototypical 200 simple moving average type battle. Let's see how it plays out. Last time we saw the consolidation. That consolidation took about 2 weeks. Last time, this was your trigger. This time, you're here in that analysis. So if you're here in the analysis, here, I think we have a little bit of time companies like
I don't think it would be a wise thing to front run a dip
No,
on utilities
we're-
where
that
rising
ain't us.
rate algos are sending everything down.
Nope, that's not us. No, when bond prices go up, we're not going to shop for dividends out there. So no, but again, I do think there are a couple opportunities here in this space to keep an eye on. Maybe a little bit of watch list candidates. Duke Energy here, battling that same 200-day moving average bounce. The sector is. I do like it. If this sector does slow down, sector confirms, you got a pretty decent line in the sand from a resistance level. That's $100 on Duke Energy. And then Southern doing a little bit of the exact same song and dance Duke is, but it's almost like these two are correlated.
Little correlation definitely happening there. And obviously, utilities down on support.
And that is sector roundup.
And a good one and a mixed bag in sector roundup there. We've got some good, we've got some bad, we've got some upgrades, we've got some downgrades. Love the analysis there, Matt. All right, a couple of quick looks at a few different commodities here. You already mentioned crude oil pushing towards 77. It is testing that upper end of that channel there, Matt. That's one of the reasons why energy is looking so great here today. Gold sitting on support. Anything in those
one
two?
thing about crude oil, tomorrow OPEC releases a lot of data. When I was speculating about what could happen with crude this week, you're running into resistance, big potential catalyst day if OPEC says blah blah, we got your back, production, supply, demand, imbalance. Could be a catalyst day tomorrow.
Okay. Oil data on a Tuesday. We'll see if that helps it test that breakout channel up on the top end. But then Bitcoin, Matt, last one we always look at, there's not much going on with Bitcoin here today, kind of stuck in the middle of its range. Anything on that chart that grabs your attention? You want to update?
No, I mean, you're still looking at the same analysis we looked at last week. You're fighting on the 200-day. You're fighting at 40,000. You're fighting at 44,000. It's a bad marriage right now. You fight when you wake up. You fight when you go to bed.
Yeah, it is. It's fighting it out right now.
But he'll figure it out.
Somebody's going to win.
They're gonna go to couples counseling. They're gonna figure it out.
One of them will, for sure. All right, that's it from a market Skyline perspective. Then last thing we're going to do here today, because we've already covered most of the news there. I know that there was some chatter around supply chain disruptions for Apple and some of those different companies. But let's move right into Gino's gems if we can. And Gino, you had something you wanted to plan here for the team here today that would help them understand, some component in the earnings
just a
season.
real quick indicator, easy stuff. How you doing, man?
Doing good, man. Doing good. Gino's Gem is a segment we're going to be doing each and every Monday. Coach Gino is a veteran trader in the market. Everybody in Team Tackle knows him really, really well. Been around 20 years. He's got a lot of gems. He's going to share one tip, one trick, one technical thing. It's whatever's in his brain there that day, and he's going to share it with you guys. So let's see what you got here today, Gino.
Yeah, I come across a lot of questions throughout the week with students and traders, brand new traders. And last week we talked about organization and putting, like the trade price on your monitor tab, putting notes in there, all that stuff. There's a lot of things, Tim, that make life easier in trading. And real quick, just had to throw Tesla on there because, as you know, in the newsletter, we all talk about our favorite pick of the week. There's mine. There's my boy right there, Tesla. That was mine. Look how to brag, Tim. Look at that breakout, right? That's you can see the screen, right? Tesla was a nice breakout here, and it's a big mover, right? What I want to talk about is how much does a stock move on an average per day? So, of course, your Tesla's a big mover. It's a $700, almost $800 stock here. ATR, average true range. It's right down here. See right here, ATR. And you can add that to your chart basically by just going in. If you have Thinkorswim or any broker will give you the average true range of a stock. And that is the average move per day. So you can see down here, and here comes the infamous pin. Here we go. Here comes the epic pin, right? Down here, it's about $20.50 a day. That's the average move. Now, here's the thing. You can build that into like our step system. We're going to put a stop. We like to put our stop farther than that way in our trade. Let me do another pick here. Apple, very popular stock. How much does Apple move a day? About 278. Again, that's the average true range. So a couple of things, little gems here is a lot of traders I know, whether it's day trading or swing trading, they want to know the ATR, the average move of the stock right now. But there's a couple little errors in this thing I want to point out. So when you're looking at the average true range here, it's 278 today, but you can see it goes up and down and it changes, right? That average true range is averaging the last 14 days of trading. So let me put another one in here. Give an example, Intel. When I put in Intel, see the box here? These are the last 14 days. I drag up, so you have to drag up the ATR, and I'm stressing that because I'm going to show you how to get rid of this drag movement. 97 cents. That's been the average move over the last 14 days. But it's not always how much it moves. You see it moved more over here. It moved a lot more back here. It's the last 14 days. To stress my point, let me put IBM in here. So it kind of gives you an idea of how much a stock moves, right? Here's $1.98. IBM's moved the last 14 days in this box, $1.98. But again, that's the average. It's not, it's backwards looking, it's lagging. It's hindsight. It's moved less and it's moved more, right? One more here, Cake, Cheesecake Factory, my favorite restaurants here. $1.69. Now see this down here, $1.69. It's getting kind of volatile here. But what's interesting here, Tim, is when you look at the ATR, I'm going to show you a fallacy here. Then I'm going to show you how to fix it. The ATR, just want to take a screenshot of this, guys. The average range of a stock move over the past days. I keep saying past for a reason. It's over the past 14 days. Now, it's not 2 weeks. That's 14 trading days. That's almost 3 weeks of trading. It's a lagging indicator like most indicators. Just because it's the average move doesn't mean it's going to move that in the future or tomorrow. So, and this is where people get tripped up with it. For example, is maybe Matt's favorite stock here, CMG. You see his 14 days back here. That ATR is really super high because after earnings gap, when it averages in these big gaps and big days, it throws the ATR way off. So you can see it has to come back to normal after it gets rid of this big move. So one big move could mess up your ATR. So bring in the next indicator, one of the little gems here. I'm going to talk about market maker move. Market maker move is the predicted range, not lagging, but predicted ATR based on the option pricing model. So the options will price in what they believe is tomorrow or next week or next month's move. So since option prices are traded for future moves and supply and demand driven, the break even of the options could be looked as a forward justification of the option prices. So option prices are pretty accurate because they're taking in a lot of mathematics there, but it's a forward-looking ATR basically. So bottom line, guys, ATR is an average daily move over past days. The expected move, which we call market maker move, is a forward-looking ATR. Now, I got a little gift for you here. This is cool because to get into the forward-looking move, there's a lot of ways to do it, but I really simplified it. That's why we call it a gem. Ready for this? You go in here, and over the next 4 days, the option prices are marking $43 up or down on CMG. See that? Over the next 53 days, the market makers, the option prices, $160. So you can see how much is priced into the options before expiration. I'll give me a stock, Tim. How about give me anyone you like here?
Let's take a look at AT&T. Matt was talking about it earlier.
Oh, that's easy to type in, right? Yep. Just T. Okay. So AT&T, it's interesting here. So the ATR is 37 cents, right? But when I go into the options, it's moved 37 cents in the past, but they're expecting 43 cents in the next 4 days based on options. 11 days, they're expecting 84 cents. So it's kind of up or down. It gives you a range going forward. Now, here's the gem, Tim. Okay, here's the gem. I'm going to jump right to it, and I'm going to paste it in YouTube link so you guys have it, and we'll attach it. Check this out. You notice how when I'm going to my chart down here, I have to drag this thing up and down. Give me another one, Tim. What do you got?
Let's take a look at Facebook. They were in the news today. One of the reasons, Facebook. Sure.
Now, Facebook, see down here, $8. I don't want to have to keep going back and forth and dragging this up and down here. See this? And then go to my option. I want to know what the expected move is tomorrow. So what I did is I have a study I'll share with you. It's called ATR top left. Watch over here on the left-hand side of my chart. Boom, there it is. So now you have up here the ATR. That's the last 14 days. And you've got the expected move for tomorrow. So this is the expected move tomorrow. This is what it moved today. Now with that up there, Tim, check this out. I'm going to gain some real estate on my charts. See how these indicators are all smashed down here? I'm dragging them up and down. Hate it. I'm going to go in here and I'm going to say sayonara to this one down here. Don't need you. Everything's right here. I don't have to go back and forth to my chain, right? Everything is going to be right on my charts. So I could go to my chart, see right here, study. It's going to be right there. ATR top left, boom. There it is. So guys, to add this to your repertoire, and so you can have it just like this. Let me make this a little bit cleaner for you. I've got my moving averages, everything here. I'm going to share this chart with you in the YouTube channel. Who likes that idea that I can just put everything on the top left to save space?
I think everybody loves the concept of simplifying, getting your data in a more efficient manner and saving you some real estate in terms of chart space there.
Yeah, now real quickly, some of you guys are brand new out there. I do this a lot in the Cash Flow Club. Two things. Number one, this Cash Flow Club, I'm going to show you guys how to go in here to set up and see all this stuff in here. I'm going to show you how to set up every single tab the right way, the best way for option trader, stock trader, what have you, all these things. So your Thinkorswim is organized. It saves you time, right, Tim? I mean, it saves you a lot of time.
Absolutely.
And also, how do you add this? Now that I got the link in there, you copy it, you just hit setup here. Now before I do that, setup, open shared item, Control V. You got to Control V it after you copy it. Hit preview, import, and you will see a chart pop up like this. Once you have the chart pop up, hit study, save study, and call it ATR top left. That's it, guys. That's it. You know, when I first heard about this, Tim, up here on the left, I was going, wow, this is great. It saves me a lot of time. And then once you get to the next level, just give you a little teaser here. Check this out. Look at all the stuff I have up here. IV, all this stuff. That's it coming up in the future, guys. That's coming up in the future. But it just simplifies your life. It puts your dashboard right in front of you. That's all I got, Tim.
I love it, Gino. First of all, thank you. I love the segment, by the way. Gino's Gems bringing us something actionable, fast, and simple that we can add to our trading, whether it's software-wise, mechanic-wise, or even just understanding the data. Gino, great job here on this one today. Matt, any thoughts on the ATR, just expected move, Gino's Gems here in general?
No, I really do appreciate Gino's Gems. I think they help us all use tech a little bit better, and I really thank Gino for coming on and showing us how to save some real estate space on our charts. That is always helpful because we want to make decisions based on price action, correct?
Mm-hmm.
Oh, yeah, and I forgot to mention, guys, another reason I'm doing this one now is because we're going to be getting into earnings seasons here next couple weeks. In a couple weeks, you're going to start seeing these expected moves much bigger than the past ATR, these expected moves. And so you'll kind of see what they're expecting, called the market maker move. Mm-hmm. So we're going to be mentioning this a lot in our shows and our classes and stuff. And by the way, this is very essential for our STEP program. You can check that on our website too.
Yeah,
Absolutely.
we use ATRs and everything.
And speaking of the STEP program, actually, Matt, that's something you're going to be teaching tonight, correct?
Mm-hmm. I am. I will be teaching the mastermind group for the STEP system here tonight at 8:30 p.m. Eastern Standard Time at over there in our Zoom room at Tackle Trading. And so if you have the STEP system, I look forward to hanging out here tonight. And I'm going to spend about 30 minutes in, kind of just study, talking about, targeting techniques and walking them through the 5 catalysts on targeting techniques. By the way, there's more than 5, but I'll just list out 5. We'll talk about each one. We'll go through examples on each one, and then I'm going to spend a little bit of time with the traders just to kind of answer their questions and, do mastermind type stuff.
100%. And by the way, if you're out there and you are a member of our pro community, come and join us tonight for that step system. I'll drop the link. You can find it on the events page as always. But Coach Matt, the designer of the system, the architect of the system, going to be teaching you guys some real good stuff here tonight in that mastermind group. It's a once a month event. I've dropped the link in the chat, 8:30 p.m. Eastern Standard Time. Marky, any other programming notes here at Tackle Trading today?
Step system, but before that, here on the YouTube channel at 7 p.m. Eastern, Coach Frank, if you're new to Tackle Trading and want to see all of the features, he does an excellent job breaking down the components, the features, what Tackle Trading has to offer, how to find things, how to best get started. Coach Frank does a masterful job, 7 p.m. Eastern here on our YouTube channel.
And Dynasty Investors a little bit later tonight as well. All right, guys, that's our show. Let's start getting into some final thoughts here for the team. Matt, you did a thorough job, breaking these markets down. Anything you just want to let the guys know, get them, thinking about here as we wrap up the show?
No, a little bit of fade action from the time we've talked to currently right now, still battling against those intraday levels. Intraday, keep an eye on 4440. Keep an eye on that intraday 44 level in the S&P 500. Then obviously we're all tracking that 4426 support level as well.
Mm-hmm. Got it. Love it. Mark, good job today. Matt, great job today. Gino, love the gem out there, Team Tackle. We love you as well. If you've not yet done it, give me a thumbs up on the show here for today. We do this content each and every day. The markets are live. We go live 12:30 Eastern. If you're new to our channel, before you leave, make sure you smash that subscribe button, click the bell so that you can get alerted and come back and join us whenever we do go live here on YouTube. And if you've not yet done it as well, pro member 15-day trial in the description in the comments of every one of our YouTube videos. Come and join us on the back end. Come and join us in those webinars, those courses with a pro membership at Tackle Trading. You will